Good afternoon, good afternoon, ladies and gentlemen. My name is Mr. Chishavaja. I am going to present you today with this session. Okay, so today we're going to talk about, like I said on my topic, is it dollar strengthening or so we are going to analyze and update from what we spoke about last time. So I remember very well last time what we did, it was the gold, and then we spoke about gold when we were still down there. I mean, somewhere around here, actually somewhere there, and then we said that they're going to come in this zone. If you followed from our webinar and also from our YouTube channel. So today we can see that they came in the zone and then they hit the zone. And then we said that a safe buy, it's a breakout. And then they broke out. So of course, remember each and every time when the market breaks out, it has to come to retest. So we are not yet sure. So a full entry, it's when these two, the red and the blue moving averages cross each other. That's when you can take this trade. But yeah, we are expecting it to go and hit our target, as you can see here. 1, 2, 3. So with this move, we might see it well during NFP. So what they might do, they might, if they happen to close above this area before NFP, well, they are going up. But if they fail, they might come down there to retest. So this will become our impulsive move. So we're going to measure the market from that point to that point. So that's what we'll be expecting. So our retracement, it will come here around 61.8%. So this is what we're expecting. Sorry. This, it might happen during NFP, this move. So we're saying that if they fail to break above here, they are coming back down there to retest here. But if they break above there, then which means they are now going. And that's on gold. So those who took it from our entries will, like I said, buy above here. It's high time to break even or to book your profits and then wait for this move on Friday. Okay, so we have to go back to the dollar index and see what's really happening with the dollar index. So some applies with the dollar index. If you still remember, we also saw those moves from monthly. If you still remember, we saw that this market is actually moving from wave 1 and then wave 2. We did this, and then we are constructing wave 3. So inside wave 3, remember, it's an impulsive wave. So there's also 5 waves inside it. So we saw 1, 2, 3, 4, and 5. So this is the 5. So meaning to say we are expecting a retracement for 4. That was on monthly. Okay. So there we go. So on that, if you are to check, so remember the most important thing in the market, you have to work around and understanding with also what's the moving average doing. So what are we expecting? We're expecting this market to come and retrace. So now we're adjusting according to price action and the levels. So it's gonna be a zone. So this is the zone that we're expecting this market to retrace in this zone. So we're expecting these guys to come in this zone. And then okay. So now we go down to daily. So on daily, what we are seeing that, okay, now currently, what the market is doing, it's bouncing on this area. So we are expecting that sooner, if they break this area, they are coming to drop into this area. This is the level that we're expecting for this retracement. So in other terms, we are saying that we are still in a buy on dollar, but we're expecting a retracement. I'm looking for that for, okay, let me do this. Just hold on for me. Okay, there it is. So we're expecting 4 to be in that area. Mm, there we go. So we're expecting this market to correct forward for there in that area. Okay, that's what we are seeing on daily. So now we go to H4. Today I'm just gonna be updating everything that we did. So on H4, what are we saying now, Mr. Trump? So I'm saying to you that the market has broke below my moving averages. So remember these moving averages, they act as support and resistance. And at some point, they are very, very, very strong. So what I'm saying in short is that there's a high possibility that this move can happen. So we are saying that if they are to correct, they have to correct and retest in this area. This area. They will retest this area, and then they'll come up and retest this area, and then from there we're going to sell. So meaning to say, today it seems like they are correcting, they are in a reversal, so they'll come there and then we break below. Okay, so this is what we're expecting. So we're expecting the market to break out from this area. So now they break out from that area and then we sell it, right? So we are saying that there is a possibility of them to go there, and then from there, and now they'll come and break to down there. Okay, so this is what we're expecting on the dollar index. So now we go to Nasdaq. So I know I've got some Nasdaq traders here. So now with Nasdaq, you can see that Nasdaq, it has retested on. So I go back to the monthly as well. So on month, so on monthly, this is what we're seeing. We saw this ending diagonal here. There was a divergence here. The market was going up, and then that's why this market is correcting, retracing. Okay, I think it's more clear on the weekly. So after that, we see 1, 2, 3, 4, 5, and then actually the 5 was extended. I needed to update this. So our 5 was extended to that point. So after this 5, now what are we correcting for? We're correcting for wave 2, right? So this is a correction. This is the channel that this market is following. Okay. So here we can see we had a fake breakout. As you can see, the market came and bounced on what? On the trend lines again. Okay. So what does it mean? This gives us like, okay, from this movement, we've got A, B, C to give you what? Your A. So this is your A. And then now we are correcting for B. So we need to have an A, B, and then another C down there because we still have to drop. But what are we doing now? Now we're constructing the B leg. But the B leg, to me, it's more of going to be constructed in a flat, irregular flat. Because if you see this one, it took out the high of that one. Right? So if it took out the high of that one, to me, it's like what do you call an irregular flat. So what do I mean by irregular flat? This is my X, so I've got my A, and then I've got my B there. I'm expecting for my C somewhere up there. So I'm expecting for this C like correction up there. So meaning to say that this is an irregular formation. So the market is going to go up. Okay, that's what I'm seeing on weekly. Then I come down to daily. So what am I seeing on daily currently? So on daily, like I said, you see that they broke this level. So they were doing some stop hunt. Well, and then they got some stop hunt actually. So and now we are waiting for the market to break this level. So what is my first target? My first target is here on this resistance level. So preferably it's that area and that area. So to avoid being greedy, let's actually take it from there. Here. So what are we saying? We are saying that they will come and test this zone. So in testing this zone, that's your first target. It's also a breakout. And then from there will be a correction, and then there will be another impulse. So this is what we're seeing on daily. And then if you go on H4, now we look at H4. Okay, what is H4 saying to you? So H4 is also showing you the possibility. So if you are to buy this market, you rather buy when the market closes above this area. So you buy and then you target your first target there. That will be your first target actually, this one. So how do you take profit? So usually when taking profit from these kind of corrections, you use your Fibonacci. You take profit in the 78.6 retracement area. So you come and draw your Fibonacci too. Okay. So with my 78.6, this one, you can see I was almost there with my checklist. Okay, there we go. So with my 78.6, this is the area that I'm looking for. Okay, and then I have to take this area. This is the area of my take profit that I'm looking for. So that's where your take profit is. Then you take profit from there, then that's it. So that's what we are looking at on NASDAQ right now. So what are we saying? We're saying we're waiting for a breakout in this area. And then let's see what do they do on H1. So on H1, you can see there's a quite a momentum. So here, it's quite a good momentum for you to take it. This is the trend line. So, and also let's use the line graph so that we can have the proper trend line. Okay, something like this. So soon these guys to break above this area is a buy. So we buy this market and then we go with it, and then our target is up there. Okay, so that's what we are expecting. Okay, any questions so far? Okay, I'm waiting for questions.
Hello, good
Yes,
morning.
morning, how are you?
I'm fine. I just joined not too long ago.
Okay.
Now this analysis now,
Mm-hmm.
is it for currency com?
Is it for what?
Currency com. Which pair is this? That's what I'm trying to understand.
Okay, this pay it's NASDAQ US 100.
Sorry. Okay, US 100.
Yes.
Okay, is this forex or indices or index?
Okay, you're saying the platform. Okay, yes, the platform is the one. Yes, that's the one. FXcom.
Okay.
Yes.
Okay.
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 Okay. Anyone with questions? Any more questions? Okay, we don't have questions. It's fine. So this is what we're expecting on NASDAQ. So usually the timing of NASDAQ is somewhere around 4 o'clock there. That's when you can look for entries. So we are going to, we're saying that we're going to be looking forward for buy entries from around that area, right?
Okay.
Yes. Yeah. So let's go to another page. So we also did what? Please remind me as well. Last week, I
want to ask.
Yeah, please, you can continue.
The entry price now for this particular pair, you are saying is where?
The what?
The entry price.
The actual price.
Entry price. If you want to buy.
Okay, this I said you buy it above here, above this candlestick here. So
Okay,
around yes, above. So you put your pending orders and then you take it from there. That's also confirming a breakout there. So you only buy on breakout. Remember, like I said, you take trades on
okay,
breakout. Yes, you don't just take trades because you want to take them.
okay,
Yeah.
okay. Then the take profit is from where?
Take profit. Oh, you just doing now, right? The profit is
Yes.
far. It's far. It's a long-term profit in this zone. So we're looking at it from H4.
The 4-hour time frame.
Yeah, we're looking at it at 4-hour time frame. That's where we are going there.
Okay.
Yeah.
Okay. Wow. Okay.
Any more questions?
I know.
Okay. So then we can proceed, right?
Okay. Then the 1-hour time frame is what you're using for confirmation, right?
Yes, yes. You can also use it for confirmation.
Okay.
Okay.
All right,
All
can
right.
go ahead.
Okay, great. Thank you. So now we also spoke about GBP USD. So remember yesterday I posted something on my WhatsApp. Those who followed, did you see it? I said something about GBP USD. So I'm going to take it again back there where we started on the monthly. Great. So check now on the monthly. We saw that also this market, it has been coming whatever the way it has been coming from, right? Can you see that? This is the market that we have since 1972. Okay. Okay. So we are now more focused on this part. So this was a impulse, another correction, then impulse, correction. So now we're expecting an impulse now, a change of direction up there. Okay. So from the monthly, we saw that it's ending with what? This is an ending diagonal. So how do you see ending diagonals? How do you see diagonals? You see them with divergence. What is divergence? Divergence is whereby price is going the opposite with what? With the RSI. Or RSI, it means relative strength index. So it's relative to what? To the market, where the market is going. So currently, we can see that on this point, the market was going up, and then here the market is coming down, right? Can you see that? So that's the divergence. So that's the first thing. So we realize that this is a triangle being formed. So we've got A, B, C, D, E. So this is the triangle. So that's where the triangle was completed here last month. So last month late, it also gave us a confirmation. This one, it spiked. So with this spike, it gives us a confirmation of what? Of the ending diagonal. So as you can see that impulse, correction, impulse, correction, impulse. So now we are changing direction. So our first target is up there, and then we also have this first target here. So remember, like I said to you, you target inside first because of these, what we call the moving averages. They act as supporting and resistance levels. As you can see, price came and then it bounced. So there's a fake breakout, it came out. It failed, and then it comes. So that's where your first target. So with this target, that's a breakout. This is a monthly time frame, right? So this is what we're waiting for last month. So I remember there's a time when we thought like this is going up here, but the following month they engulfed. So this was a signal that was a failed what? A failed impulse, a failed wave. And then they rallied down. Okay, in that rally now we go down to weekly. So as we go to weekly now we are inside the channel. We know that we've got these legs, right? We are now dealing with this part. So we also have got what? Our ABC. So we've got our A, B, and then C. So we've got A, B, C to give us the A, B. So the other thing that I want you to notice here, guys, I always tell people that A is equals to C. Normally, that's what the market does. So it gives you A equals to C, or something like this. Can you see the target? It came also somewhere around there. So the market will always move in A equals to C. So that's also your, you can see they came somewhere around there. That's the A equals to C. Okay. Are you still with me, guys?
Yeah.
Okay, great. So from there, now this is what we see. What happened here? This is what we are seeing. Okay, now the market is formed because it is giving you A, B, and then from that A, B, there's another A, B, C inside. And this one, it spiked down there. This spike was a very good confirmation. Okay, so we go on daily. And then on daily, we realize that this was the trend. So in that trend, you can see that the market, it failed to break, and then it broke here. So what does it mean? So today's candlestick, this one, that's the one that we are waiting for to confirm this breakout of yesterday. Is what I call the 50% candlestick. What do I mean by 50%? It means that when this candlestick closes above or somewhere around proportionally equal to 50% of this candlestick, the opening and closing price, that's what we call an engulfing candlestick. It means it is engulfed. Anytime it closes 50%, it engulfs. It's an engulfer. So how do we see engulfers? You can see here, there was an engulfer, even though the market tried to wara, but there was an engulfer here. Then you see the market dropped. There we go. There's a 50%. This was up, and then it closed somewhere around above 50%. So do you put your stop loss above there? It fell, and then it came down. There's a 50% here. This candlestick, it engulfed more than 50%. There's a stop loss below that candlestick. It went. So those what are we call 50% candlestick. So this is what we're waiting for. But now if you go to a smaller time frame like H4, on H4 now, it's no longer a 50% candlestick. It's becoming what? A breakout and a retest. So it's retesting that level. So they are retesting this level that they broke. So it becomes a retest here. So this retest most probably, this is so beautiful, Fitch. This becomes an Elliott wave count. So how do you count this? Now I'm gonna teach you some tricks of this market today. So I'm going to zoom it so that I can give you some confirmations here. So what is happening now? You can see that the market impulse and then corrected, right? And then another impulse. So what does it mean to you? To me, it comes to, okay, this was my impulse, like wave one. Okay. There we go. You can even see with my Fibonacci too. So those who have been following me, they know what does it mean when it comes like this. So you just need to get the wave two. This is a Fib zone, 61.8%. There we go. They came in and then they flashed out here in the 78.6%, which is the deepest zone. The meaning of this flash, it means that they wanted to hand some stop losses. In that flashing, then they went out. So with this, it gave me what? The confirmation of what? Of wave two. Okay, great. So I've got, now I can label it. This is my X. I've got my 1 there. And then I've got my 2. Automatically, I got my 3 there. So 3, it is say that, and then I need 4 and 5. So 3, it is say that it has to be 61.8% of what? Of wave 1, right? That's what it is. It has to be 161.8% of wave 1, okay? Okay, that's what we know. And then this is 3. It flashed out for 3. Okay. So in flashing out for 3, what am I trading now? Now I know that, okay, I'm looking for what? I'm looking for 4. So for my 4, how do I look for 4? I come again from that point to that high. So what does this mean? It means that I want the 38.2% of this to give me what? The confirmation of 4. Yeah. This. So this is my 38.2% zone. And what did I say about the moving averages? They also act as what? Is support and resistance. Can you see what is happening there? So I'm saying that if this market is going to retrace further, they are going to come and test in this zone, and then we go. So this is the zone that we have to keep our eye. So in that, they'll give me my 4, and in giving my 4, we are constructing 5. And then in constructing this 5, now we've got full wave 1. But for the time being, let's focus on this. So if you check my WhatsApp, my status yesterday, I said this is the what? The NFP level, meaning to say we are expecting a drive. So NFP is there to drive the market. So we're expecting a drive. I don't know if you get me. Okay.
So you are expecting a drive?
Yes. So what does it mean, a drive? An impulsive move. So whenever there are fundamentals, they are there to drive the market. They are not there to confirm whatsoever people use. They are just there to drive the market.
Upwards.
So like fundamentals like NFP, FOMC, BOC, you know, all those kind of things. The interest rate of Canada and all those things, they drive the market. They give you momentum, drive.
Okay,
So,
okay. Now,
yes.
The drive you are talking of, is it upwards or downwards?
Remember, we are now in a change of direction. We came with this from monthly, if you were following.
Yes.
Yes, we came with it from monthly, right? Also, yes. So in doing that, so at the end of the day now, you check at this level. This is the level that we're looking at, right? Can you see that? This one, it becomes this level. In this level, this one. So this is where we're expecting this market to come in.
Okay.
So if they are going to retrace today, they are going to retrace until this level. So if you are to buy, you rather buy above here. Don't buy it inside there. There's no entry now. Now there's nothing to do. So we go to H1. And then on H1, what are we doing? We are waiting. But in our waiting, let's go back to H4. I want to show you something so that you understand. So remember also, impulsive waves, they also move in a channel. They can move in a channel. So what kind of a channel is being created? This point to that point, right? And then we have from this one to there, and then there's a breakout there, right? Okay. All right. Awesome. So it's something like this on this wave 3. Okay. So now let's go to H1. I think it will be more clear on H1. So on H1, we have something like this. This is what we have in here. From that point, there we go. Okay. So this, it confirms what? So in that, you must not remember I said to you, there are what we call inside waves. These waves, they are formed inside. And you must know that whenever there's an impulsive wave, there are 5 waves inside it. There are always 5 waves inside an impulsive wave. Every impulsive wave. So I want to show you another secret here. So check here. From that point to that point, this was the correction for our wave 2, right? Okay. And then we have from there to there. So what drove this market? You have to pay attention. I want to show you a secret. So if you check from here, this was my A, B, C. So it becomes A, B. So sorry, it's A, B. Then this becomes A, B, C, D, E. So this spike is fake. It's a fake. If you go on line graph, there's nothing like that. You see, it's a fake movement. That is what we call the spikes. They're looking forward for stop and, you know. So they gave you A, B, and then C. But your C, it was formed with what? 1, 2, 3, 4, 5. You see, so it becomes A, B, C, D, E. So this becomes a 3, 3, 5. What is a 3, 3, 5 in terms of corrections? Those who do L12, it's called a flat. It's a flake. So you just have to know the types of corrections and everything. So then from there, they came in the zone and then they went out. But when they are going out, like I said, there's an impulse and there's always a correction. So they give you 1, 2, and then they give you 3, and then they give you 4. and giving you 4, then they give you what? An ending diagonal of 5. What is an ending diagonal? This market is coming down on RSI, but it was going up. That's why we are having this correction. But with this correction, we're not expecting it to be a much correction because we're correcting for what? For a retest and also for a fall. That's what we call confluence. In having confluence, it gives you the reason to buy or sell. So that's your H1. If you want to go further to 15 minutes, well, it's up to you. You can go.
Excuse me, please. Where do you say there's a confluence?
So confluence is whereby 2 or 3 strategies or confirmation. They give you 2 or 3 strategies or confirmation, meaning to say they will be confirming the same direction. So that's what we call a confluence. So whenever you are trading, don't have one signal. You have about 2 or 3 strategies confirming the same direction. Because if you have one signal, it will fool you. So you must have about 2 to 3. Mostly I use 3. How? I use 1, my moving averages. Number 2, my LO12 count.
So you use your moving averages and what?
Moving averages, LO12 principles, and also the simple breakout and retest strategy. In doing that, with LO12s, they also cover support and resistance, everything, because some of you might go in a buy on this one. But this it can fool you. So I'm saying if you are to buy, you rather buy above this level, or else look forward for the market to drop into this area. If they don't close above this level, don't buy, don't sell, wait. Currently you wait. So you can go 2 days without trading, it's fine, wait. Don't trade every day. Don't make it a habit to trade every day because you want to trade. Learn to wait. Okay, any questions? I think I'm done for today.
Okay.
Any more questions? So next week, we are going to analyze old USD and New Zealand USD. Okay, if there are no questions, thank you very much, guys, for joining. And I will also try to, by all means, to post this video on YouTube. You can get it on YouTube. I will share my YouTube.
I want your YouTube link so I can rewatch.
Okay, you text me on WhatsApp.
All right.
Okay, thank you very much. All the best. Bye. We will see you on Friday before NFT. You're going to do another webinar.
All right.
Okay, cheers. Bye.